Afternoon, this is the Mutual Fund Corner. I'm Mangla Malu. With me is Sumaira Abdi in the Mutual Fund Corner. Like every Tuesday and Thursday, we answer all your mutual fund related questions. Before we do that, a quick look at the markets. Rip-roaring rally seen as far as the frontline indices are concerned. The Nifty still holding up with gains of over 100 points. The mid-cap index now come off the highs, but still holding with a gain of almost 120.7% on the mid-cap index seen. More or less maintained as far as the green tick on our markets are concerned after a bit of a sell-off in the afternoon. Currently, the Nifty Bank is the one which is outperforming with a gain of about 1.5%, very close, about 30 points away from its all-time highs. Meanwhile, keep an eye out on the Sensex 2 high by about 375 points. The advanced decline ratio not looking too bad, close around 3 stocks in the green for 1 in the red. And this rally follows a massive rally that we've seen over the last few trading sessions on our markets itself. So for instance, the Nifty, including today's gain over the last few trading sessions in March itself, has added close to around 460 points. The Sensex gaining as well. And what is interesting is from the start of March, the mid caps have outperformed the Nifty or the frontline indices by a factor of 3. And as we speak, we're seeing a fair amount of writing on the 11,200 put. Remember, day before yesterday, the 11,000 put is something that the bulls believed that is a mark they can hold, and now they're climbing higher as we speak. So this is for the options that expire on the 14th of March, which is this Thursday. We're seeing 20 lakh shares added on the 11,200 put. That's telling you that the bulls believe that even 11,200 is a mark that will hold up until the next 2 trading sessions. Until before today's trading session, the maximum open interest was at the 11,200 call. Now the market's sustainably holding above the 11,200 mark is led to some bit of short covering as well. The 11,250 put, if my director can pull that one up, should come up for you as well, as the market's gaining further ground, closing in on that 11,300 mark. The 11,250 put also has come in for a fair bit of writing by the bulls. So that's telling you that there is a fair amount of support which is sought on the downside, and the option writers who are most active during weekly options looking to eat some premium believe that the markets will sustain at these levels. Overall as well, if you just take a look at the Nifty, the short puts are nearly 1.8 lakh shares. That is, as far as the FII positioning is concerned, this compares with around 80,000 short calls that there are. So the street believes that there is support on the downside, and there you have it, 11,250 put as well, seeing close to 16 lakh shares added. So between 11,200 and 11,250, close to 40 lakh shares have been added by the bulls. That's telling you the firm amount of support that we're seeing. It's interesting to see that as we speak, there is also a lot of short covering taking place on the 11,200 call, which up until this morning was the maximum open interest in terms of this weekly option expiry. So the 11,200 call writers, they're running for covered close to around 3.5 lakh shares in open interest, with the premium surging to as high as 84 rupees. So the 11,200 call seeing some writing, also some sort of short, some unwinding, also seeing some unwinding in a lot of the other calls higher than 11,252. First up, all the top stories, then we hand over to Sumaira, who has a bevy of mutual fund queries to answer. India follows the risk-on rally with the key indices soaring over 1% each. L&T and ICICI Bank are leading the pack. Nifty Bank 2 trades strong. The mid-cap index gains but underperforms the frontliners, with the index up around 0.7%. The real estate stocks, they're on fire as CLSA bets on a recovery in the housing sector. The rupee is near the day's high, trades over a two-month high on strong FII flows. Remember, just the last 4 trading sessions, the FIIs have added $1 billion in our cash markets, and this, added with global dollar weakness, is strengthening the rupee. Jet Airways, that stock is on our radar as investors await the outcome of Etihad Airways board meeting. Banking sources tell CNBC-TV18 that Etihad will infuse 1,600 to 1,900 crore rupees in Jet to keep their stake at 24.5%. NIIF-backed Abu Dhabi Investment Authority may also pick up 19.5% stake. Bharti Infratel under pressure as Bharti Airtel will transfer 32% stake in the company to its wholly owned subsidiary, Netel Infra, at around 290 rupees a piece. All right, with that, joining us today, we have Feroz Aziz of Anand Rathi Financial Services to answer all your mutual fund queries. He is with Sumaira in the mutual fund Corner. Sumaira, over to you.
Mangalam, thanks very much for that. Feroz Aziz is with me. Hi, Feroz. Good afternoon. But, before we get talking about the specific queries that have come in, there's one query that has, been on the investors' mind, and we've been getting a lot of feedback from people over the last few months as well, which is what should people do in this pre-election mode, right? So there are some sort of fears, there are some jitters that people want to be on the sidelines. They don't want to put in money. How much credence should people actually put to big events like elections? Should people stay on the sidelines? I mean, should investors not be using this as an opportunity?
I think we should all be led by data more than perceptions and impressions. The perception and impression says that elections are a scary year. But data last four general elections, that's 20-year data, says that the worst performing one-year period of elections is 17%, 6 months before and 6 months after. And the best has been 55%. So it's an opportunity, point one. Point two, if elections are going to be critical, then you have to look at what is going to be your strategy. And of course, now that we are in the market, let me give a strategy. Call options are very cheap. So sometimes you can protect your portfolio. You can protect your portfolio, move out of equity, buy a call option at 5% of May, and get a capital protected strategy if you so chose to. The third important thing is risk aversion is the reason why mid caps and small caps have been lower. So I think that will return after elections. So I don't think a status quo mode is a bad idea. And I think if you just stayed put, that will be wonderful to actually do.
But Feroz, when we tell people that there's this risk over here, I mean, what is risk for a mutual fund investor, right? How does he quantify risk? How does he measure risk?
Yes, I think I very passionately feel about this topic because risk has been an English word all through, high, medium risk, low. Risk is very easily measurable. If you're measuring the hard disk capacity of your computer, risk is something as important as it could get. So risk can be measured using standard deviation. Standard deviations are nothing but measures which tell you the possible deviation from the average return the fund has delivered. So please look at the standard deviation of a fund. If it is greater than 14, then it's a risky fund, in my opinion. If the standard deviation is 10 or below, it's a very safe fund to be in. So you should first look at the standard deviation of each fund. Point two, you should try and calculate the standard deviation of your entire portfolio, which is very simple, and a Microsoft Excel sheet can do that for you. And then comes the number and its interpretation. If the number comes below 10, 11, then you are on a low risk zone. If it comes as 15, 17, 18, then you need to be doing some degree of management after having measured this number. Several PMSs and small cap funds have 2022 standard deviation, and the person who's buying it needs to take that point in mind, keep that in mind before he buys that fund.
All right, with that, let's get started with the queries that are coming in. And our first caller is through to us. Ankur is on the line from Mumbai. Hi, Ankur. Good afternoon. How can we help you?
Hey, hi, Samara. Good afternoon. First of all, thanks for having me on the call. Sure. And I have already shared my portfolio with you over the mail. So I'm currently investing around 23,000 of rupees in different mutual funds in different categories. So my primary goal is to accumulate a corpus of around 1 crore in 15 years. So I just need to know whether the amount which I'm currently investing is sufficient or not to achieve the target. And mutual funds which I am currently investing in, are they fine, or I need to do some modification into it?
Okay, and besides this goal of 1 crore in 15 years, do you need money for anything else?
Yeah, so recently I've been blessed with a baby boy. So I'm planning to, thank you. So I'm planning to accumulate a corpus of around 50 lakhs for his education. So I need to know how much amount I need to spend. Secondly, should I increase the SIP amounts in the ongoing funds, or I should start a new fund with a new SIP?
Okay, so first let's tackle these two queries because they could be interrelated. 1 crore in 15 years. He also needs about 50 lakhs in, say, 18 years from now. So is his current investment on track to meet both of these goals, which would be a total of 1.5 crores?
Actually, no. The 1 crore, which he has set himself to achieve, is certainly achievable, Ankur, with the current SIP. Now that you have a new family member and a dependent, I think a 5,000 rupee recurring investment could get you that 50 lakhs in the 18-year period, which you're wanting to save for the child. And what you've written to us is very inspiring because you've also created a contingency fund of 6 months. And I think that's a very good strategy. So you have it in track. Some modifications on the fund is critical. You will have to add Reliance Large Cap Fund and Mirai Asset India Equity Fund on the multi-cap side and the large cap. And then you can definitely add Canara Robeco Emerging Equities for your child. And that 5,000 rupees can be split into these 3 funds, and that will help you meet the 50 lakh rupee objective. But I think it's kudos that the person is actually planning. As soon as the child is born, you're thinking of his education. I think it's inspiring.
And how much would he need to ramp up the SIP to be able to meet both goals?
So if he started a 5,000 rupee parallel SIP right away, then that will take care of that. But it's always a good practice, Sumera, like you highlighted.
Ankur, you also wanted to buy a car, am I correct?
Yeah, so I'm planning to have a car in next after 3 years.
Okay.
So I also need to know, I just want to accumulate around 8 to 10 lakh rupees after 3 years. So should I put in the conservative hybrid fund, or should I completely put into the debt fund?
Okay, yeah. So 3 years is a short time. Why not just take it on loan?
Correct. I think if his aspiration for a bigger car and if he's collecting down payment, that's a different story. But I don't think you should go for a hybrid fund for sure, Ankur. I think you should be this side of the table or that one. And if you feel like mixing them both, mix them separately rather than give it to a hybrid fund, because relative performances are lesser by almost about 1.5% when you analyze them separate or mixed in one fund, Ankur.
Okay, and finally, Ankur, I think you had a query on an international fund. Are you looking to invest there?
Yeah, so I'm looking to invest a part of my investment, around 5 or 10% into the international mutual fund. I did my analysis regarding ICICI US Blue Chip Fund. So I need to know whether it is the right fund to invest in, because the fund manager's experience is just 2 years.
Okay. Feroz, what would you say to this? I mean, that incremental 5,000 that he has to put in, can some of it at least go into an international fund? And which one would you recommend?
See, I think from a contemporary situation perspective, US has gone significantly ahead, and the extra return which US has generated might just reverse, because you're speaking of a specific US fund. So I would recommend you against it. But having said which, if you have a child who's going to be 18, 20 in the next 20 years, and if he wants education abroad, it is a smart idea. And for everybody who's a parent who wants children being educated abroad, it becomes a good source of accumulating dollars over long periods of time on a monthly basis. So if it's goal-oriented, yes. If it's just tactical allocation from an opportunity standpoint, I would say you're better off in India because of its relative underperformance with our emerged countries.
All right, Ankur, I hope that has answered all of your queries. Thanks very much and all the very best.
Okay, thank you.
All right, you're watching the MF Corner. Anand Rathi Financial Services. Feroz Aziz is with us to answer all the queries. And let's get to our next caller right away. Sandeep is on the line from Hyderabad. Hi, Sandeep. Good afternoon. What's your question?
Good afternoon, ma'am. Yeah.
Go ahead.
I'm having investments in 3 funds. One is BSP Natural Resource, and then LMT Emerging Business Fund, and the third one is Mirai Asset Hybrid Equity Fund.
Okay.
All are growth plans. I'm a full-time trader. What I've done is I diverted my profits into these funds. So I can hold it for 3 to 5 years. Is that for good investments, or else I need to change any fund?
Sandeep, what about the rest of your mutual fund portfolio? I mean, is this it, or is there more?
No, only these 3 funds I'm holding right now.
Okay, and are any of these linked to any goal that you might have? I mean, what is the reason behind these investments?
Listen, because I'm a full-time trader, what I've done previously was, when I got some profit, I used to reinvest it in some shares.
No, fair enough.
What happened means...
And you've diverted that money to mutual funds now. So your object, therefore, is purely wealth creation. Am I right?
Exactly.
Okay. And how much, only 3 to 5 years is the horizon that you want to keep this money in, right?
Yes.
Okay. Feroz, 3 to 5 years would, in my view, be too short a time to look at equity in any case. But nevertheless, for somebody who's doing an SIP, has a time horizon of a max of 5 years and at least 3 years, what would you do? And also, I think one of them is definitely a sectoral or thematic fund, which is the DSP one. What should he do?
I think your eye went to the right fund, which is a sectorial fund. People have this tendency to believe that sectorial funds will give you a higher return for the higher risk it takes. But if you look at the efficiency of giving you the extra return for the incremental risk it takes, it's an inefficient method to create risk in your portfolio. And data says so. Sharpe ratio, which is a good measure of risk-adjusted return, is lower for several sectoral funds, especially this one. So you're better off getting a high risk by concentrating your portfolio. So I would recommend an SBI focused equity, which is diversified across different sectors, but it's concentrated with 2023 stocks to give you that extra risk and give you a commensurate return for the risk you're taking. That's point one. You have a balanced fund in your portfolio, separate them, move that into Franklin Income Opportunities Fund and the Mirai Asset India Equity rather than the Mirai's Balanced Fund. And lastly, you have L&T Emerging Business Fund, which is a small cap fund. HDFC small cap would be my best pick in the small cap category, and sticking to a large AMC in the small cap category could be a wise decision, especially when small caps have a risk which is on the higher side.
All right, Sandeep, that works for you?
Yeah. Yes,
okay.
yes. That's
Super. Thanks very much. Up next, Vivek Kumar is on the line with us from Jharkhand. Hi, Vivek. Good afternoon.
Hi, good afternoon.
Go ahead.
Yeah. First of all, thank you for entertaining my question.
Sure.
But before I present my question and my aim,
Vivek? Okay, I think we've lost that audio connection. But nevertheless, let me read out his question for you. So Vivek is 34 years old, right? He has an SIP, which he's investing in the stocks, which is about 30,000 rupees per month, which is well diversified between FMCG, oil, etc., etc. In terms of mutual funds, he has 12,000 rupees in the Axis Focus 25, where he's chosen the growth option. He has 18,000 rupees, also monthly SIP in various international funds. Now he's also starting to diversify his investments into bonds and NCDs, right? So he doesn't need money in the short term. He hasn't told us exactly how long he'll need the money to remain invested. But nevertheless, his additional question is that he is collecting money for his child's education, where he wants to invest it in a low-risk fund. I think what he has already researched is the Tata AIA Super Income Plus, which is a 12-year premium paying term with annual premium of 3 lakhs. Anyway, this looks like an insurance plan to me, like one of those child education plans. So what would you advise? One, of course, Feroz, is that since he's only 34, I'm going to assume that his kid has at least 10, 12 years to go, right, for when he's going to need the money, in which case you wouldn't necessarily need a low-risk fund. And how would you rate his overall portfolio?
I think from a diversification standpoint, Vivek has done a wonderful job. But I think sometimes diversification needs to be optimal. It need not be more than you need. For example, NCDs and debentures, buying them directly might not be a very, very good idea. Because you carry credit risk, and debt funds are a very good method to diversify credit risk. So point one, you have a well-diversified portfolio. Don't take that concept significantly more and stop here. Point two, buying debentures yourself has proved to be detrimental to portfolios when credit risk fructifies. So a debt fund is a better strategy because you have 50 bonds, 40 bonds in the portfolio. Point three is, I personally think a seasoned investor like Vivek, who has gone through the full circle of internationally investing as well, should not be buying an insurance-driven investment plan for his child for sure, and should just look at mutual funds and cover your life, Vivek, for 1 crore of rupees to make sure that the education objective for your child is taken care of, assuming that you have another 10, 12 years for your child to be able to consume this money. These are the 3 pieces of advice for him.
Okay, well, I hope Vivek was listening in. Up next, Raj Yadav has written to us from Kolkata. So he's a young investor, right? He's only 21. He's putting 2,000 rupees in ICICI Prudential Large Cap, 1,000 rupees SIP in the Mirai Asset Multi Cap, and 1,000 rupees in the HDFC Small Cap. Okay, before that, actually, there's a piece of news that's coming in. The Nifty Bank is at a record high. I think, Mangalam, you may want to take us through what's going on.
Absolutely, Sumera. So the Nifty Bank is at a record high. The record high, the previous high was 28,388, and now as we speak, there's been a sharp surge. And taking it higher, we have ICICI Bank. That one should come up for you. Along with that, now it's IndusInd Bank, which has moved higher as well. Majority of the contribution coming in from ICICI Bank, Axis Bank, as well as HDFC Bank. But now, just as we speak, IndusInd Bank has moved higher by about 4.5%. And what that has done is taken the other stocks in the index higher as well. So we have the small cap index, which is at the high point of the day. The Nifty higher by about 125 points, and the Sensex has crossed nearly 430 points in the gains. In gains. So 125 points on the Nifty today means that for the month of March itself, the Nifty has gained about 485 points. Add 15 points to that perhaps in the last hour, and there would be 500 points on the Nifty for the month of March itself. A stellar move as far as the Nifty Bank is concerned. 424 points just today. But if you take a look at it from the start of this month, it's been higher by 6%. Remember, going into the start of this month, the Nifty Bank was lower for this year by about 2%, and now 6% gains in the month of March itself coming in for the Nifty Bank. So there it is at a record high. Let's see whether the Nifty as well as the Sensex follow suit. Remember, the Nifty is just about 3% away from the record high. What we'll do is, on that note, wrap up on this edition of Mutual Fund Corner. You remember to email us your queries. We'll answer them. But a very interesting last hour of trade coming in the next segment after the break with Closing Bell. Stay tuned to CNBC-TV18.